Johnson with Liberty and Finance. And back with us today is our good friend Steve Penny from the Silver Chartist. Steve, thank you so much for joining us today.
You bet, Elijah. Good to be talking to you today. Silver poked its head above $48 this morning, getting slammed backwards, so we've got a lot to talk about.
It's an exciting day. I really wanted to have this live stream. We had planned it yesterday, actually, because of the historic close for silver, the highest quarterly close we've ever seen. Also, silver making the biggest net gain in a quarter that we've ever seen as well. So historic rises. But you mentioned the price action today is just crazy, down over $1 here. What do you make of this?
Yeah, it's not surprising at all. I mean, I think in multiple time frames. So like in the shorter time frames, I've been saying conditions are ripe for a sharp pullback. Now, is this the beginning of a more material pullback? That remains to be seen. But this type of volatility in both directions is to be anticipated, especially around this critical number. I mean, everyone and their brother who's been following silver knows $50 is major resistance. So we should be expecting a battle right near this $50 level. Now, in the fullness of time, I think $50 becomes support and we go much higher. But uh, well, I'll leave it there. But there's a battle going on right now at $50 silver.
And I know before that we started going live here, you were talking about important movements in the US dollar index as well. How does that play in?
Well, when I think about silver, I think of three potential outcomes, and I'll tie that into the dollar. And this applies to more than just silver, but specifically silver because it's right at this key inflection point right here, right now. Three potential short-term outcomes for silver I see is we run up to 50. Everyone knows there's major resistance at 50. It is the realm of possibility that we run up to right about 50. We got to $48 this morning, and that acts as just a wall of resistance, and we get a sharp pullback right there. I'd ascribe to that maybe a 40% probability. That's admittedly subjective, but about a 40% probability that that happens. I would say an equal probability would be that we break through $50 silver, back test it, and then consolidate right along 50 as support for a few quarters, maybe a few weeks, few months, but probably a few quarters before moving higher. So that's, I'd say, another 40% probability. And then the least likely outcome, in my opinion, is that we just slice right through $50 and go up to 65.70 on this run. Parabolic moves do happen, especially in silver. You know, it is possible, but I think that is the least likely outcome. And then when I look at a long-term chart for the dollar, yes, if you go back to the 70s, the dollar is it's made lower highs. That is true. But if you go back to the early 2000s, the dollar has been in a gently rising uptrend channel, and we're getting fairly oversold in the dollar right at the lower edge of support. So just as conditions are ripe for a short-term sharp pullback in silver, conditions are also ripe for the possibility of a rally in the dollar. And I can share my screen to show that if you like.
Yeah, and I think just as you look at silver, also, if you wouldn't mind sharing with your viewers your perspective on kind of the downside potential from here, because obviously this can rattle people who are investing in silver, just seeing within an hour or so this, $1.50 drop or so in the price.
Yeah, I watched it. And I like to say volatility is the price of admission to participate in a commodities bull market, but especially a silver and also uranium, I would put in that category, a silver and uranium bull market, because these are inherently volatile sectors. So, I mean, to enjoy the upside, you have to endure the downside volatility. It's just part of it. But you asked for a chart of the dollar. Here's that long-term chart. I was saying, going back to the 1980s, you can see the lower highs for sure. I mean, that's obvious. But then you go back to 2009, and you can see pretty clearly here, this very clear, very well-defined uptrend channel. And when I zoom in a little bit here, you can see we're sitting right at the lower rail of that channel. I'm not predicting, but I'm just saying there's a very decent probability of some kind of spike in the dollar. Now, what could cause that? I don't know, but conditions are ripe. And when conditions are ripe, it doesn't take much of a catalyst to cause some kind of panic-driven sell-off, in risk assets and broad equities, and that would cause a spike in the dollar very likely. Now, if that were to happen, let's just say we got a spike in the dollar, some kind of panic happened. We've seen it in COVID. We saw it with the tariff tantrums. Let's just say we got a spike in the dollar. How does the Fed react? Well, they're going to respond probably with debt monetization, currency creation, and quantitative easing stimulus like we've never seen before. And I think that's where you see the dollar pull way back and silver go up to triple digits, gold go to 10,000 plus, and the ultimate targets we're all expecting.
Now, did you want to share with the viewers a chart of silver at the moment, kind of what you're seeing on that technical level to give us a visual?
Sure, absolutely. Let me go ahead. I think the long-term chart here shows it best, but we'll zoom in and look at the long-term, or excuse me, the shorter-term chart as well. I like to go big to small when looking at technicals and fundamentals as well. So this is a longer-term chart for silver. Let me just dial this in so the viewers can see it clearly. There we go. That looks like a good scale. So this is a monthly log scale chart going back to 2008. One thing I note back here is back in 2008, we went from a low of $8.40 up to $50 in a relatively short period of time. That's almost a 500% move in about 2 years. So talking about the potential for parabolic moves, that's certainly there for silver. Now I've drawn this long-term rising wedge pattern, and you can see how well it's respected it. I mean, whenever we pull back to the lower edge of support, we tend to get bounces. In fact, we've gotten one, 2, 3, 4, 5 times now. Conversely, with resistance, you can see this very clear trim profits line I labeled it as. Every time we tap this resistance line, we get a pullback. Well, here we are right here, right now, testing this resistance line of this the upper rail of this rising wedge pattern. It happens to also fall within this confluence of resistance between 45 and 50. We got up to 48 this morning. So this is a stiff resistance zone. Now combine that with a monthly RSI that just got to 78. Now, whenever you get like a run up towards resistance with an extreme overbought RSI, these are just obvious, clear technical signals that, very often you don't just punch right through it. So that's why I ascribe that, almost 50% probability that we're probably not going to punch right through 50 on this first attempt. May see a pullback or some consolidation below there. But this is a very clear long-term chart that I've kind of got burned into my brain. I call this the roadmap. I've been calling this the roadmap to $50 silver. And I've been expecting this, run up to 50 going back a few months now, really to the beginning of this year. And it's played out very well. Now, when we zoom in on the daily chart for silver, you can see 48.01 this morning. We were rising within the confines of this uptrend channel here. You can see the green dotted lines there. They're kind of light. So wouldn't be surprising at all to see, we broke out above it. Now a back test. Whenever you get a breakout above key resistance, that resistance becomes support. Very simple. So we're just a few cents away from back testing that first level of support. Now, will it hold? That remains to be seen. And yes, technicals can help give you an edge in forecasting the future, but I think even more valuable way to use technical analysis is to make if-then statements. If this happens, then I will do this. If this happens, then the path of least resistance becomes that. So if we were to fail right here at about the $45 level, well, then the path of least resistance becomes a pullback towards 43, and then you've got really big support down here at 41. And we're very stretched above the 200-day moving average, which that support is all the way down at 35.21. Now, it's premature to talk about a pullback to $35. Not expecting that at all. But, $40 major support right now. That 43 to 41 is pretty key support as well.
Certainly. And I think when it comes to the gold market as well, I mean, we were touching that $3,900 level. Now we're back to the lower 3,800s. What is your take on gold at the moment?
Well, going back to the beginning of this year, my measured move target was 3,000 to 3,500, 3,500 on the high end. Now, in hindsight, obviously that was way too low because we're well above that. But at the time, when I was making that forecast, that seemed like, yeah, right, Steve, we've heard this before. We're not going to get that high. So my point is, I remain very bullish on gold and silver over the very long term, but over the short term here, the risk reward ratio over the next, let's call it a couple of few months is not very favorable. In other words, yeah, there might be a little bit more upside potential, but the downside risk is about equal to the upside potential over the short term. So, what I'm personally doing is I'm continuing to dollar cost average every month. I convert some of my fiat, dollars that I earn into physical metal. That's automated. But when it comes to like speculative positions, I'm just being patient. There will be pullbacks. May not feel like it when we keep going up month after month, but there will be pullbacks and there'll be more favorable entry points. I've got up to 30. Actually, this isn't really updated. But yeah, we got as high as, let's see, 39.23 this morning. That RSI right now on the monthly chart is the second highest it's ever been. Second highest it's ever been. The other two times it got up near this high was in the mid 1970s, and that during the mid 1970s when RSI got this high, there was a little bit of a consolidation for a couple few months, and then it went on to go parabolic again. The second time was in 1980, which was the peak, and it took decades to get back. So which one will this be? It could be, it doesn't have to be one or the other, but it's something that I think people should be people say, oh, I see the comments on X. It's different this time. It's always different this time when you get big run-ups. I doubt that it's actually different this time. I think there's going to be either, a pullback or consolidation. So this is a risky juncture to be entering any kind of speculative positions in gold, in my opinion.
Now, as for pullback targets, what is your perspective on how low gold could go from here?
Sure. So there's major support now. $3,500 was very key resistance. You'll recall that back in the tariff tantrum lows, gold got up to 3,500. And I was telling our members, and even in public interviews, hey, let's look for gold to just consolidate sideways around 3,500, maybe 33 to 3,500 for a few quarters. And that would allow silver and the mining stocks to play catch up. And that's exactly what happened. Gold just went sideways all the way until August last month when it finally broke above $3,500. So that was major resistance. Now it's key support. A pullback to 3,500, it'll be a 400 and something dollar pullback from, the $3,900 peak here. That would be enough, I think, to work off a lot of the kind of Johnny-come-lately speculators, the weak-handed momentum chasers, and maybe form a nice base above 3,500. I guess the short answer is pullbacks to 3,500, I think, would be a pretty favorable entry point to begin scaling in. Now, at some point, we're going to revisit this 200-day moving average. That you don't go years and years without touching the 200-day moving average. But pullbacks to a rising 200-day moving average are very favorable accumulation points, because when you're above a rising 50 and 200-day moving average, institutions, hedge funds, trading algorithms tend to be in a buy the dip mode, and they're just programmed. It's just an algorithm that's programmed to buy dips towards a rising 200-day moving average. So what I could see happening here is this 200-day is rising. That could rise to reinforce this $3,500 area, making that support area even stronger. So a pullback to 3,500, I think, is well within the realm of possibility. And if that were to happen, then that could be a good spot to consider accumulating. There goes that's that if-then statements, right? Using technicals in that way. If we pull back to 3,500, then I will, allocate so much capital towards it. That's my personal plan anyway. Now, if we keep running too, so I'm not advocating selling any physical metal or even long-term core exposure. So I don't want to sound like I'm bearish here. I've still got core long-term positions. So when it comes to strategy, I think this is important. This is a key takeaway. Yes, I've been taking profits in my speculative accounts, but I've maintained enough exposure so that if we keep running higher, if my mining stocks run up 30, 40% from here in the next few weeks, few months, I'm still happy because I've got enough. But I've trimmed enough profits where if we get a 30% pullback in some of these mining stocks, I'm happy because I have cash to buy the dip. So I think threading that needle where you're happy, you're content in a variety of different short-term outcomes is kind of the strategy to employ. And that's very personal for different people.
Now, people have obviously been paying close attention to platinum this year as it's increased, 50, 60%. We were racing towards the $1,600 level, but now, same with gold and silver, we've pulled back quite a bit today. Your take on where we are with platinum?
Yeah, so with platinum, I like to start with kind of where we were technically and where we're at now. So where we were, Silver Charters members will remember I've been I was pounding the table for a long time here, right around $1,000 platinum. I was saying, like, hey, if you can buy platinum below 1,000, that could be the kind of opportunity that you just never see again. I view as platinum as having more upside potential than even silver, possibly. However, it's riskier. So the risk reward ratio is not as favorable as silver, but it could outperform. And platinum is now, silver's closing in on its all-time high. Platinum is now kind of like the lone commodity, the lone metal that's way below its all-time high of $2,300. As we sit here right now, it's at let's see, 1575. On a ratio basis, platinum is still undervalued relative to silver and gold. On a technical basis, we broke out of this very clear triangle pattern. And then when you get like a multi-year triangle pattern like this, that's just clear and clean, I call this like a coiled spring ready to pop. And then boom, when it pops, we've run from 800 up to 1600. That's almost a double in a physical commodity. That's the kind of move you see in mining stocks, not usually the metal. So there, as you can see here, a little bit overbought, but I guess to keep the answer concise, in the same way that I thought if we could just hold near 3,500 in gold and silver would play rapid catch up, I think now in the same way, if gold can stay above 3,500, silver can stay above 40 to 45. Well, I think that provides room for platinum to catch up to its big brother and sister gold and silver.
Fantastic. Well, Steve Penny, we really appreciate your time as always and jumping on this call. It's was perfect timing given the pullback we've seen in silver and the historic record-setting prices we've seen recently. Any last thoughts before we let you go? What should investors and stackers be thinking of right now?
Yeah, I always like to just leave people with, we tend to focus as speculators and investors on, hey, what's the forecast? And I'm all about forecasting. However, what often gets overlooked is crafting a personalized strategy. So I think, that's the focus. What I try and focus on myself and for our members, Silver Chartist, is having a strategy in place that fits your needs, that allows you to, one, sleep well at night, that maximizes not just potential returns, but risk-adjusted returns. That's really what matters. So having a plan that allows you to prosper in a variety of different short to intermediate term outcomes and allows you to sleep well at night.
Fantastic. Steve, once again, thank you so much for your time today. If our viewers are interested in learning more, silverchartist.com is the place to go. We'll put a link in the description once this stream has ended. So thank you so much, Steve, and you have a good day.
All right. Thank you so much, Elijah. Bye-bye.